All right, folks, welcome back. Real quick little review for pound and E-mini S&P today. All right, so obviously on Friday I gave you a commentary mentioning how between euro and pound was the better trade. I felt this was better because it dipped down into its fair value gap, and here has left this portion of the imbalance here. And that red line here denotes where it would likely draw up into. All of this was in Friday's commentary, okay? The market trades up, hits that level, and completes the idea. Now, at this point, I go neutral because I don't know if it wants to go higher to go here or if it wants to just consolidate. So I hold no interest at the moment now on cable. Not that I had all that much interest anyway, but based on what I gave you on Friday, that's what we have here. So let's take a closer look on the lower time frames. I got a 2-hour chart. Why a 2-hour chart? Just simply because the candles look better, cleaner on the 2-hour. Run up, rebalance back down into an optimal trade entry, runs right up into the high I mentioned on Friday. That would be the draw on liquidity. And here's the business on London session. So here is a low. We had stops swept here. We consolidated, left this low in place. Why? Because we've already taken stops here. The likelihood it was going to draw up into that imbalance on daily chart was given to you on Friday. London low, short-term shift in market structure here. Fair value gap at a discount relative to this low, to that high. Hammers it beautifully. Perfect. Perfect delivery. Rallies up right to the level I mentioned on Friday. Okay, so there's your business there. We have an optimal trade entry for the London session too, so you can look at that. That's a separate pattern, but you can learn that on the YouTube channel as well. All right, E-mini S&P. I mentioned how we went up to this level. This was a private group level target. Hit that on Friday. Only went 1/4 of a point above it. And it was a small little imbalance in here. Does it want to go back down into that area? I don't know. I'm favoring that. I think that's likely to occur, but I could be wrong. All right, so here is the 1-hour chart. You can see we have a fair value gap here, shift in market structure here. This high to that low, that's your dealing range. Okay, I don't have a fib on it, but you can do that on your own. This fair value gap is above equilibrium or at what? A premium. So we have a breaker here as well. So I mentioned this on my Twitter space today, which was very therapeutic. The down closed candles in here, that is your bearish breaker. So you can see it has that pattern as well. So it's not just a one-trick pony model approach around here. I give you all kinds of tools on this YouTube channel, but this setup is basically the same thing I've taught in the 2022 ICT mentorship. So instead of using a 5, 4, 3, 2, 1 minute chart, you can trade with an hourly chart here, and it does that rather handsomely. But these levels here are linked to the fair value gap on the hourly chart. So that's what I was showing in my charts, but didn't draw your attention to where they were in terms of the price action. All right, and here is those levels as well. And then we have a fair value gap here on the 15-minute time frame. So you can see how the bodies are respecting that imbalance there. So we trade down and back up into respecting the imbalance here, the high. The market breaks lower and attacks the relative equal lows here. This imbalance will make more sense when you go back up to the hourly chart. That's this one here. I failed to mention that, I apologize. And the liquidity resting below here would be an obvious draw. And on the 5-minute chart, this is what it looked like on the screenshots that I was working with off my phone because I was preoccupied with other things this morning. So fair value gap here. I mentioned that my interest was down in here. And what I thought was going to happen, I thought that we were going to sell off if we had a fair value gap, which is what I did. I waited for this return back into the fair value gap, and I sold short here. And limit orders were in this. I felt that we could then consolidate, and then the afternoon I wanted to see it trade for the sell side over here. That's what I was looking for. You can see the low to high. Equilibrium is that level here, which is 50% on the fib. Fair value gap there. So I was looking for a closure of that, and I covered just below the midpoint and before we got to the low end of 39.67 3/4. Why did I do that? Because what I just mentioned, I felt that this was going to be the move for the morning, and then the afternoon would create the secondary sell-off. So we had an absence of news in the economic calendar this morning, so it was just standard delivery on price. And then we went to sloppy range-bound trading, and then created an imbalance here. There's a short there. There's a short there, targeting sell side for the afternoon. I'm not interested in it. I watched it. All right, and then the 5-minute chart here. You can see the business, short-term low, shift in market structure, fair value gap, hits it. There's my short there, 10 contracts, 7 off here at the fair value gap. This is all stuff I tweeted on Twitter. And then the partial here, and then finally this close was at the 39.69 1/4 level. So all of this looks like I got out down here. It wasn't the case. I got out right in here, and it just overshot it and ran the relative equal lows here, and then ultimately does so in the afternoon. Here's the afternoon business. That's the short for the afternoon. So I did not participate, but I was watching it, and I think I earned the right to say I expected it, but I'm not participating because I'm waiting for tomorrow. All right, and here is the morning setup. Just zoomed in. Shift in market structure, displacement, fair value gap, beautiful delivery, breaks down, short-term low, broken again, displacement. So now we can use the same pattern that's here. It's being done here. Okay. And while I don't necessarily need this one, I'm getting in sync with it here. So I'm selling 10, covering 7. Why 7? Because we're close to the objective I had for my morning. And then 2 come off here, and then the final came off right before we hit the low end of that imbalance. And there's the business over here for the sell side, which it hits. So unfortunately, it went a little too far for me in the morning session, and because it did that, I was not willing to participate. This fair value gap here, notice what we have here. We went down, so it goes up here, so there's one candle going up, offering buy side. Then this candle offers sell side. Is it balanced? No. Okay, no. It's just redelivered. Now, once it trades through it again, this range is now balanced because we went down, up, down through it. So that's why it stops like a brick wall right here. Okay, that's not supply and demand. Okay, there's nothing in Wyckoff that talks about that. That's right out of the ICT book of price action. There's nobody out there teaching that. And this is, when you hear people talk about something being rebalanced in price, this is the reactions at a balanced price range. This is rebalanced. It also has a fair value gap here. But why is it so effective there? Because of all the work over here and here. Okay, think of the paint roller analogy I use. When it goes up, down, up once more, then it's balanced. Okay, or the paint is delivered to the canvas. Okay, the chart here is your canvas. Each individual candlestick is a representation of a stroke of that roller that you would apply paint to. And you have to study price like that. It helps, obviously, if you have some kind of analogy, what is you're looking for in price action instead of just this randomness of candlesticks. So anyway, that's going to be it for today. Hopefully you found this one insightful. And until I talk to you tomorrow, Lord willing, be safe.